Hi, everyone. Today is Thursday, March the 21st. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Always want to start on the days in these last few moments. As we test new highs, I want to show you what I did so that you can learn from it and incorporate it when it feels right to you. So what I've done is create a measured move. I chose this last wave. Why? It felt like a good breakout range. It's the bottom of a flag pattern that breaks away, and then it's the top of a congestion zone that finally leaves. So that's why I chose it. But you can choose any other. And the goal when you're walking up a Fibonacci expansion is to see what happens at those zones. So yesterday morning I said, hey, listen, 523.50 to 524 looks like the measured move up here. We gapped right into it this morning on Swiss National Bank, lowering their interest rates by 25 basis points, and now we're fading. So in an unusual space, what's happened here is that Monday, Tuesday, and Wednesday were largely bullish, while last week's Wednesday, Thursday, and Friday were largely bearish. That's almost the exact opposite of what we've seen over the last 4 weeks or so. So the question is, what's happening with the patterns? If we want to get really sticky, we can say, hey, it doesn't matter what's actually happening, just so long as I can see where it is I need to position. So let's get to the 30-minute and have a look at what happened. We gapped up, Swiss National Bank, faded, almost filled the gap. All right, so I want to take this line and I want to clone it. And I would like for us to consider 521 to 522 being the floor of the market action today that says, hey, if we can't hold this, we're going to fill the gap a little bit. Doesn't really mean a ton if the Swiss National Bank lowers its rates by 25 basis points. I'm not really sure it does, but it's sending this news across the wire that, hey, don't worry, we are going to lower rates. And of course, the market, when the Fed said, hey, listen, we will have 3 rate cuts, they're not saying when, but if they're saying, hey, 3 rate cuts, it's already March, maybe it'll come next time. And with the Swiss National Bank saying, hey, we're going to go ahead and cut rates ahead of you, ahead of the ECB, maybe even ahead of the BOE, Bank of England. Everybody else is just holding pat, right? Holding pat. Japan, of course, raised rates. Some of the very unstable currencies have been raising rates as well because their inflation is in hyperbolic mode. And so they don't affect us in general, unless, you happen to have a relative living in Turkey or Argentina, okay? But there are a lot of places where things are really moving quite a bit. So we have to be careful overall. And the one thing that I want to tell you is, please watch your size. All right, so we see trend, upward moving 8. This one is now 30. Right, we'll leave the 30 on for a bit. Why not? It doesn't really matter, right? 20, 30, who cares? All we're looking for is price congestion. Okay, price congestion happens to work at the 8. Great. It could come in here and hold at the 520, which is a super round number that's far away from the 30. Remember, it's not so much where the number sits. It's the slope of motion that tells you what's going on. Don't try to use, a 0.5 pencil when you need to be using a chubby crayon with these sorts of price action events. There's no exact line in the sand that everybody moves from because everybody's trying to game everybody else. So let's take a look at the volatility. We see sideways action in general, but a downward sloping VWAP. Listen, as long as we recover that VWAP and we hold support, we're going to rise. If we recover the VWAP and we can't get back above that 523 when the news came out, we are likely to fade. As this looks, it says, hey, buy the dip, but take some profit on that edge because I'm not sitting in a big overbought or place to buy territory like it did all day yesterday after the news came out. All right, let's look at the Qs. For those of us that just care about these sorts of things during the course of the day, we'll look at the Qs. Here's what's going on. This is the only one I still have in yellow state. Why? Because it's just breaking out of a very heavy congestion zone. It came almost right into the measured move, did not give us a brand new high. Everybody else has got brand new highs. These guys, not so much. Okay, so this is still in yellow state. However, momentum is strong. And so what's it telling us? By the dip. Listen, technology is not going away in our world. What we have to do is decipher who's good technology and performing well as a company, and who's bad technology that really sits in the malinvestment zone that they just need to go out of business. Listen, that's capital markets for you. Live with it. We're not here to bring along the stragglers. We're here to sit in the space where the strongest compete for the best products and give them to us at the best price. Okay? We go work at a homeless shelter if we're looking for things where we want to care for things that cannot care, or folks that cannot care for themselves. Okay? Just trying to be frank with you. You're getting into the markets to make money, not to hobble along with whomevers. And cheap money brings along the stragglers that need to be out of business and doing something else that is more profitable to them and the world economy. All right? Sorry if that catches you the wrong way, but it is what it is. This is how we work in the markets. All right, so now what are we looking at? The breakout and then the fade, but the hold above this close, you can see it bouncing off the 446.72. The question is, what are the buyers or the traders positioning themselves into in the early part of the markets? Well, the pre-market traders are long, obviously. They've been buying the market up. But will they continue to break to the north? And that is, again, what you want to do. Here's the thing. See the slope? See the location of where this is? Listen, it's technically divergent. So it means by the dip. So you're going to look at this line at 446. Actually, let's pull it to the top of the gap there. 446, sitting on this edge, and say, all right, hey, this is where the floor needs to be. If I lose this, traders could give it up just a wee bit, all the way back into here, right? At which point it'd be another buy zone. So my thought is the following. If, per happenstance, we get to the top of this range and it breaks out, the first shallow fade is a buy zone until it breaks this ledge. There's going to be some measure of risk because there is technical divergence. You want to have small size, but the trend says when it comes back into that 8, you want to buy it. So if you see that, take the risk, or if you're so inclined, take the risk, use small size, and then follow it up the chain. And of course, you can do this with the 0 DTE options, which are running the show. Of course, let's look at the volatility bands as they load. We can see that yesterday's VWAP all the way down here, right? 441. We're not really sure we get back to that. But if we are running in the framework as the last week saw, we saw Monday, Tuesday, Wednesday sort of hold and rise a little bit. Thursday, Friday collapse into support. This week, we saw the same thing. Monday, Tuesday, Wednesday, hold to rise. Is Thursday going to be the Thursday, Friday fade back into deep support? I don't know, but it's a pattern that I saw and I think is worth looking at. Don't continually try to buy dips if you break that 8. Anticipate that it might run into the 30 and then collapse into a smaller time frame where you can see both trend and momentum in your favor and take the trade in that time frame. Rewind that and listen to it, because that is some golden information for you right there in terms of trading mechanics. All right, let's take a look at the ES. ES, also a beast, right? Let's look at the daily. I've got measured moves everywhere, folks. Deep support line, I still have as 51.85, right? Range resistance, I have as a measured move. And that measured move is 53.23 to 53.55. Okay? That's, again, what wave did you use, Anne-Marie? I just used that wave. It's an area that breaks old resistance, becomes new support, tests it for 3 days, holds the moving average. Completely arbitrary for me. Choose any wave that you like. Just make sure it's a complete wave, low to high. And then you can map out your Fibonacci's that way. This thing is holding solid. It's breaking up. It's got brand new highs. You can obviously see that these people are long in the overnight. Okay? Let's go down to the 30-minute. If we look at the 30-minute, we can see that they're long into the overnight, but they are dipping into support, and they want to challenge this 53.15. Now, was 5,300 the Goldman high for the year, or out of Sachs? Maybe not Sachs, maybe JP Morgan. I don't know who it was. Somebody said, hey, 5,300 is the year cap. They're all the way here right now. This market could, listen, it's going to go until all the people stop buying and everybody wants to sell. It's going to keep going. And how do we know what direction we need to stay in? It's the slope of the moving averages combined with the slope of momentum. That's all there is to that. Old resistance becomes new support. Let me duplicate this one. And then our goal is to say, wait a second, can I follow trend so that trend will pay me? And that's all you care about. So here's the thing. Old resistance, new support. So 5302 is going to be that number for us to watch today, maybe 5300 because of the nice round number. And then, of course, people are going to try and game that and wash somebody out. So I would look for 5297 as that region to go, all right, if I lose that zone and I bounce, but I cannot get up over my 53.15, I know I've got downside pressure on the horizon. Okay, and you can see volatility expanding a little bit, but look at that VWAP. It's flat with the other moving averages saying, hey, I'm long, but, I think I'm going to take a breath for a little bit here. You've got to watch for these breaks. That's going to tell you the shift of motion. Let's take a look at, let me turn this off. Let's take a look at the NQ. Sorry about the sniffling. You know what's going on. I have the bug that will not leave. Again, another measured move. Here's the move that I used. This wave. Why? Top of resistance, bottom of support in general, breakout action, right? Could I have moved it up a little bit? Sure, right? I could have moved it up to there. I could have moved it to there. I could have moved it to here. Any of those places, folks, it's going to give us that rotation into the next move. And I have the wider ledge because we know how the NQs can explode. I have the first test, 7111, and then 802. And then, maybe we hit 19,000 before this is all over. But take a look at momentum. Straight up. Absolutely straight up. Okay? It looks quite different to the Qs. That, I think, is very, very important to notice. It looks quite different to the Qs. The futures are running at a different speed than the Qs, and I really believe that it's got to do with how much hedging these futures are being used for. Okay? I think they're being used in a hedging space. So here we are, a little bit of negative divergence, but we're above the moving averages. Slight upward slope in the VWAP. We just tested the VWAP at the 18,600 level. What are the traders trying to do? Well, they're trying to get to 18,667, 668, right? They're trying to get there. So who's going to stop them? Sellers. So what do you want to watch for? You want to watch for the sellers that come up into that range, right? 670. Watch for them to fade that area. All right, let's take a look at the YM. Oh, did I? Yeah, I did show you the levels. Here's a look at the YM. Right? We've got that fade. 40,000 in the overnight. I don't know if you guys remember, I said yesterday, hey, listen, these guys are probably going to try and hit 40,000. I mean, why not? Right? Look at the size of the gap up here in this motion. It's monstrous. Right? So the measured move shows 40,051 with 40,260 above that. Where's the wave? It's this candlestick to, where did I have it? Let's move this wave properly. 280. I know why I did that. Let's do this. Let's change this wave. All right, 230. Also, I'll shift this to 230, but then it's 530 above it, right? The measured move that I gave us, listen, notice Fibonacci measure, as well as the measured move from the candlestick range that I drew yesterday. It's very simple, folks. Traders are simple people. We just look for the round numbers and we follow direction of price. The moment people start to overcomplicate things, that's when things go off the rails. And I am preaching to the choir. I'm going to tell you, I overcomplicate things all the time. I overthink way too much. Very bad habit. It's a lifelong process of trying not to think too much. It is seriously the bane of my existence. So here we are. What do we want to see? Right? We want to see the bounce off the floor. We saw this in maybe SPY. Right? We want to see the bounce off the floor support, which it's giving us. Let's change this. We want to move the stroke down, and we want to change the color to something not so noisy, right? So 40,000, good round number. Could be a little bit more. You know, traders will try to game that. And so that's really all you're looking for. Look at this. Momentum shifting already, telling us to buy the dip, right? If we lose the 30, we're going to follow trend and sell the bounce. As simple as we can get. All right? Looking at the volatility bands, here's the upshot. Here's the downshot. Just walk it through, folks. And remember, how do you know prices are not going to continue? They stop heading in the way that they were continuing. And so far, we're holding the VWAP and we're holding our moving averages. We've got to trust that price will follow. And let's not think about, oh, you know, it should. The market doesn't care what we think it should or should not do. Absolutely not. The market does not care. As I mentioned yesterday, oil at the top of its range. Notice the volatility band and momentum together, along with prior congestion, tells us this is the likely rotation event. And 2 days in a row, that's exactly what we're doing. What is the support edge? I think it's the round 80s number. Here's what happened. Somalis are back in there. I think it's the Somali pirates. Some pirates, I don't know where they're from. They're back in there, making a mess, gobbing up the works, and we are very likely to bounce off new support. Okay, we got all kinds of shipping problems this morning simply because these pirates are back in those seas that they used to spend a ton of time in. All right, that's that. So if we go to the 30-minute and you're saying to yourself, man, I want to trade oil, you better have a peek at what these moving averages are telling you and watch for the volatility bands to say the following. Remember, how do we know when volatility bands are telling us that price action is going to shift? Number one, the vol bands begin to change shape. But before that, we start testing lows away from the deep side of the band. That means we test lower lows, but we aren't holding the bottom edges of the band. We're holding closer to the top edges of the band instead of walking them down like this. All right? So that's what you really want to watch for. 80, good round number. Traders love it. 79, 80 to 79, 75 might be the floor of that support zone. But as it sits right now, every bounce is a sell zone because trend is down, the VWAP's expanded, the price action is in the red part of the VWAP ribbon. Everything is telling us that's the direction we ought to go. So let's do what it's telling us to until it tells us not to do that. All right, folks, that's it for me. I'll see you on Top Step TV today. Take care. Bye-bye.